What I've noticed, and probably everybody asks you, is that you have decided to get out of the markets at the latest stage of 2024, like early this year, just before the entire correction took place, which is the exact opposite of what everybody on social media was believing was going to happen, given we are supposed to get into the fourth year of the cycle, which is the big bull saga year. What drove you into the decision to sell everything going into 2025? What were the key principles or like signals that you were looking for?
Yeah, so you're right that we exited a bunch of positions at the end of December, early January. It was, I think, it's driven by a couple of things. Number one, that just seemed like, it was kind of your standard Q4 experience. It tends to often be that way, especially this late in the cycle. Um, but more importantly, there seemed like there was a lot of hype around the new administration coming into DC. And obviously, yes, a lot has changed. It's clear that it's been impactful, but it takes time, right? And so the hype that we were starting to see leading up to January 20th or whenever inauguration day is, it felt disproportionate to the actual changes that would be able to happen in quickly enough of a time to justify that. Um, and we've kind of seen that to become true. So at that time, Arthur and I, we took a trip to Mar-a-Lago for other reasons, and we met some folks in the administration and around the administration, and it was clear that obviously crypto was not their highest priority. Obviously, that shouldn't be a surprise to anyone. So that kind of further solidified our perspective that, look, yeah, we'll probably get policies and rules in place that we like, but it's going to take some time. And then for that to then percolate into actual innovation that reflects that, and then that innovation to mature, that we're talking about a whole cycle. So the benefits of the Trump administration likely will be really felt next cycle, but we'll see. We're getting a little bit of it now.
Yeah, you're touching upon that. I mean, I think during that period, people were expecting the Bitcoin strategic reserve to be confirmed within like a week, standard crypto
Right,
stuff. Uh,
right, exactly.
and then there was a cold shower where they said, "Whoa, okay, this is going to take some time." But in the recent like weeks or months, we see the Genius Bill coming in. We see the Clarity Act coming in. A lot of listings and IPOs on exchanges with blockchain native companies. How do you see the impact of like the two bills that are being approved into the space right now?
Yeah, I mean, clarity, we'll see how it plays out, but at least there'll be, at least a major departure from the insane reality that was enforcement through, I guess, regulation through enforcement right before, where it's like, give it a shot and we'll see if we sue you or not, right? It's like that's how our industry was regulated. You ask the government a question, hey, am I allowed to do this? They'll say, I don't know, try it, and we'll send you to jail if we don't like it later. Just insane. So at least there'll be a departure from that. Hopefully, I think there will be a sustained departure from that. As far as the Clarity Act, but we'll see. There's still more to be seen on that front. It's still underway. On the Genius Act side of things, very bullish, obviously, for the existing incumbent models, right? For Circle, et cetera. We'll see how it impacts the newer business models, like the Athenas of the world. I think it'll be net positive, and then obviously a lot of the value flows will hit certain L1s that are kind of inherently preferred in that. So it's good to see at least we have some foothold. We'll probably have to evolve and adapt these regulations as time goes on, but it's an amazing starting point.
I think it is. I mean, maybe it's correlated to the recent surge of Ethereum, where most of the stablecoin activity is taking place on Ether. Um, I mean, we've also seen some big Web2 companies coming in, like Robinhood, saying, "Hey, we are building tokenized stocks on Arbitrum." Is that is that going to continue to have a big wave in the upcoming years where these type of news items are going to take place? Like, is that the new use case that we were looking for in the market?
Yeah, I mean, if you people would always ask me, right, in the last couple of years, my friends who are not in crypto, what is crypto actually used for? Like, does it have product market fit anywhere? And my answer was always the same, right? It was, yeah, we've got Bitcoin, right? The meme coin that everyone's decided is has value, a store of value, just like the meme rock, gold. So fine. Um, And then we have stablecoins. Those are the two primary initial use cases that actually had product market fit, was used outside of crypto, used by non-crypto folks, was not speculative in nature. The tech function has never really been major issues with prevailing business models in that space. And I think now that that legitimacy is enshrined in something like the Genius Bill, or the Genius Act rather, we can now safely basically market this stuff to new kinds of audiences. So that's new kinds of builders and founders, right? Because now you've got all this talent in SF being like, whoa, I totally was sleeping on this for like 10 years. Now let me look at what is this stablecoin stuff. And there's some smart brains there. They'll think of cool business models that we in our little incestuous industry didn't think of. So that's great. We'll have new kinds of builders enticed into this space. We'll have new kinds of investors, larger pools of capital, the more sophisticated investors, TradFi money, et cetera, coming into the space to invest in that ecosystem. And then new kinds of users, kind of all this like beautiful flywheel. New kinds of users using the better products that hopefully get unrolled or get rolled out in this process, and also integrations with existing business models. Like Wells Fargo, for example, integrates with stablecoins, and you'll have new users who aren't even aware that they're using stablecoins in the back end of their usual normal course of business with these companies. So I'm very bullish.
I mean, ultimately, I discussed this in one of my previous shows with the head of product of Optimism. I think ultimately what we are trying to achieve within the Web3 space is to create a product that people are going to be using without knowing that they use blockchain. It's kind of similar to like right now we are doing this podcast online, which means we're using an HTTP website. I have zero clue how this works, but as long as it works, it's fine. Is that like the first case with stablecoins that are people are likely going to be using blockchain without even knowing that they are using it?
I think, yeah, that's the eventual end goal. And it already, in some parts of crypto, it kind of feels a little bit like that. It's getting there, let's say. But yeah, we're not there yet. The user interfaces and experience is still way too complicated for, I'm here visiting my parents in my hometown of Austin. And until they can easily use these products without having to ask me any questions, we've got a long way to go.
Well, how is explaining crypto to them?
Yeah, it's still very convoluted, right? It's exactly what you said. If you try to imagine explaining what email is to a bunch of people who are used to fax machines in 1991, and you're like, yeah, so you like there's two types of back end processes that are happening. There's some like code that does this and that. It's just very complicated. And
Hmm.
the end user's like, well, I'm just gonna keep using fax because all I do is just like type five things and it sends and it works.
Hmm.
So I think we're still there. It's we got a long way to go.
I watched the documentary BlackBerry the past weekend, which is fascinating to watch, where BlackBerry was on top of the league, and then Apple came around, and all the people at BlackBerry didn't realize or understand why a full screen was actually better than having the keyboard. It's I would definitely say if you haven't watched it, watch that one. It's quite similar to all these things that are happening. If you're staying in your echo chamber, then it might be hard to see what the people actually need and to see which product is actually a product market fit. However, I would like to talk about Maelstrom because, as I said before we went live, you've got a liquid book and a venture book. We do the exact same. We have a venture capital and we have a liquid fund. Why do you have these two books and why is it relevant to have those?
Yeah, so we started off as a VC book when we launched in Q1 2023. Then in the second half of last year, we decided to spin up a liquid arm as well. And the idea there was if we were to keep these siloed, then to some extent we will unleash, kind of the best skills of each type of team. Venture investors look at very different things than hedge fund investors. And we wanted to make sure we're attracting talent that can bring both skill sets to the table. But ultimately, these two groups do need to interface with each other, right? Because we're in this crazy industry where venture kind of, it's like liquid investing is sort of a venture strategy and vice versa. and there hasn't really been a financial landscape that ever looked like this before. So I think eventually every VC fund in crypto has to become also a hedge fund, and vice versa. So that's kind of like, while these are two different buckets within our investing strategies, they we do interface with each other quite a bit. And we've also started onboarding a third strategy, which we're in the process of rolling out, which is a buyout strategy, which is separate, but there are still some synergies with the other two.
And if we talk about the venture book, I mean, there's a constant debate happening on whether investing into pre-TGE projects still makes sense. Like in the Netherlands, there are multiple venture capital companies inversing and becoming liquid. So they decide to take, let's say, smaller market cap projects and buy them on the open market or through an OTC because they think that's more interesting. Are there still opportunities for VCs in the pre-TGE markets that you're seeing right now, or how is the market changing?
Yeah, I mean, it is cyclical ultimately, right? So when you're deep, when something is just broken, FTX is gone, everyone's scared, crypto's a bad word, everyone thinks you're either a criminal or bankrupt if you're in crypto. That's the perfect time to start investing in the pre-TGE rounds, right? I mean, maybe not that week, but like in the next couple of months, because a lot of the best founders are minted then. They're the ones who've been sitting there waiting to build something that's actually innovative, that actually moves the needle. It's not just a copycat of what you've seen, not like, Dex number 685. Um, there's also there's dried up liquidity, so you're usually able to get better terms, and usually can get better valuations as an entry point. And then, the unlock periods, which are like 3, 4 years, the math makes a lot more sense when you do it that early because they'll start to unlock when the bull market happens. So I think that that makes sense to then focus a little bit more on the venture strategy. But as far as like this transition to liquid, VC funds tend to do a little bit more of that as the cycle starts to pick up and we start to enter more bull dynamics because nobody wants to be left in a 4-year lockup holding the bag when they enter it at the top. When let's say you do like a 1 billion FTV token 2-year unlock at the top of the market, well, you're probably going to start unlocking when it's like 300 million at the next um, bear. So I think it makes sense. A lot of funds have transitioned that way, but I think there'll also be a reversion back a bit when there's a bear market again.